Hello friends! Today, I will start with a great news that the IRS has announced a considerable increase in the contribution limit to the health savings account for 2024. For 2024, self-only HSAs will rise to a contribution limit of $4,150, up from $3,850 in 2023, and family HSAs will rise to $8,300, up from $7,750. Now, for those who are new to the health savings account, in this video, I will cover 1. What is a health savings account, or HSA? 2. 10 amazing benefits of having a health savings account. 3. How can you create the most beneficial health expense plan using H that will save you not only from the huge burden of medical expenses in the future, but also taxes? So, let's get started. What is a health savings account? Well, an HSA is a tax-advantaged personal savings account used only for medical expenses. The contributions to an HSA are made with pre-tax dollars, meaning that you won't pay income tax on the money you put directly into your HSA, and you'll save on income taxes for the year. The contributions are invested over time and can be used to pay for qualified medical expenses. So basically, by opening an HSA account, you are accumulating funds exclusively for medical expenses in the future. Now the question is, why should you open an HSA when you can just stick to health insurance? So here are 10 good reasons for opening an HSA account. 1. Contributions to an HSA are tax-deductible, even if you do not itemize your deductions on your tax return. 2. The employer's contributions to your HSA are not included in your taxable income. 3. Investment income earned in an HSA is tax-free. Any interest, dividends, or capital gains earned on the funds in your HSA are tax-free. 4. If you use the funds in your HSA to pay for qualifying medical expenses, those withdrawals are tax-free. 5. Rollover of HSA funds from year to year is possible, unlike flexible spending accounts, FSAs, which have a use-it-or-lose-it rule. This means you can save up your HSA funds for future medical expenses. 6. You can use the HSA funds to pay for long-term care insurance premiums, subject to certain limits. 7. HSAs can be used to pay for Medicare premiums. You can use the funds in your HSA to pay for Medicare premiums, subject to certain limits. 8. Since the individual owns HSAs, not the employer, you can take them with you if you change jobs. 9. While HSAs are primarily designed to pay for current medical expenses, they can also be used as retirement savings vehicles. Funds in your HSA that are not used for medical costs can be saved and invested for retirement. 10. HSAs have high contribution limits. The HSA contribution limits for the tax year 2023 are $3,850 for individual plans and $8,300 for families. You can also claim an extra $1,000 in savings if the participant is 55 years of age or older. As you can see, the health savings account is a great money-saving instrument that, as I will explain later, can also be used to accumulate for your retirement. But first, why buying a high-deductible health plan can be a perfect combination with an HSA. Now that you understood the value of a health savings account, I must add that an HSA can become an immense money-saving plan for you if you buy a high-deductible health plan, or HDHP for short. So, what is HDHP? Well, it is a health insurance plan with a higher deductible than a traditional insurance plan. It means monthly insurance premium is quite low in comparison to other health plans, but you pay more health care costs yourself before the insurance company starts to pay its share, your deductible. When you combine a high-deductible plan, HDHP, with a health savings account, HSA, you are securing the ability to pay for certain medical expenses with money free from federal taxes. So if you have an HDHP and don't need many healthcare items and services, you may benefit from a lower monthly premium. If you need more care, you'll save by using the tax-free money in your HSA to pay for it. Coming this far in the video proves that you are interested in HSA accounts. Thank you. So let me now explain who is eligible to apply for an health savings account. You guessed it right. Not everyone is eligible for HSAs, so here are the conditions that must be fulfilled for opening a health savings account. 1. You should be 18 years of age or older. 2. You must be covered under a qualified high-deductible health plan, HDHP, on the first day of a particular month. 3. You have an annual deductible of at least $1,400 for self-only coverage and $2,800 for family coverage. 4. You have an out-of-pocket maximum that does not exceed $7,050 for self-only coverage and $14,100 for family coverage. 5. You are claimed as a dependent on someone else's tax return. 6. You are not enrolled in Medicare. 7. You do not have other health coverage that is not an HDHP, with some exceptions such as dental, vision, and long-term care insurance. 8. You have not received Veteran Affairs medical benefits within the past 3 months. One last important piece of information. How do you open an HSA account? The first thing you can do is check with your health insurance company to see if they partner with HSA financial institutions. You can also check with your bank to see if they offer an HSA option that meets your needs. Brought to you by IRSTaxApp.com. Please subscribe and click the bell icon. Oh, yes, if you have any questions about the health savings account, please write in comment section.